6/13/2019. It is Thursday. The markets are open. The markets are flat to doing not much here today, which is a good day for Theta Thursday. Welcome out, everybody. It is Coach Tim, your host, with Matt and Cody. And we've got a fun show here planned for you today. We're going to be getting into bear call spreads. But before we do that, before we get into market analysis, I got a question for Cody and Matt, which I did not prepare you for. What's your favorite Metallica song?
Oh, wow. Favorite Metallica song?
Uh-huh.
I mean, the entire Black Album is amazing.
Correct. But we were, teenagers at that time, so we loved it, of course.
I'd say Master of Puppets the one for me.
Cody?
Where did this come out of?
Because I've been jamming tunes all morning. I've got a tackle trading playlist called the Trading Day playlist on our Spotify account. I put a question out there on Twitter and Facebook, and I got a bunch of lists, from all of our students out there, halftime crew. And just before I got on the halftime report, I heard Whiskey in the Jar by Metallica, and that song just always fires me up.
I like the old Metallica better than the late 90s Metallica, though.
Hey, man, I get
80s Metallica was like legit rock stars.
Most people who love Metallica agree with that, but I was 16 in late 90s, and so usually you love all the music when you're like 15, 16, 17 years old. That
was a good album too. That was I believe Whiskey in the Jar was their first single off that album.
Well, and that was actually a cover, right?
Yeah,
that was a cover. I think. Oh gosh, now somebody correct me. I know who it was, but I'll have to think about it. They covered that song from somebody else, but it was wonderful. Got me fired up here today to trade the markets on a flat day. Yeah.
Oh, that's another question.
I got to go with the basic. I got to go with either One or Enter the Sandman. That's the one that gets me fired up. I mean, it's well known, but.
Okay. Next question is we let everybody else come in here. Good way to stall there. What's your go-to genre of music when you're day trading?
Oh, that is.
Do you get all fired up and attack the market, or do you like put on some old blues and jazz and get all kind of just
Generally, the Grateful Dead, Willie Nelson, and laid back chill music to put me in a good mind space to just kind of lay back.
Mm-hmm.
I don't need Welcome to the Jungle. I don't need Guns N' Roses, AC/DC all the time. I know other people are going to want it. That's how they like work out and that kind of stuff. But I don't want the emotions of that all the time when I'm day trading. Generally, when I'm day trading, I want to be in a peaceful place. So, just something chill.
No, I'm with you. You. Depends. It depends. If I'm attacking the base trade, I'm going AC/DC back in black. I'm getting those beats. Thunderstruck. I'm getting Thunderstruck on there. Get the beats on there.
I got you.
Yeah.
I got you.
Who Lindsey Sterling is?
Lindsey Sterling. I don't.
No. She's a violinist, but she also she mixed her music with like dubstep. So it's like harder violin type music. So that's
I'm going German Rammstein. That's what I'm going.
Yeah, I could see it. Hey,
I'm going German Rammstein.
Whatever your favorite kind of music is out there, let us know in the chat. What do you like to listen to when you're trading, when you're focused?
Are we continuing to build that tackle trading Spotify list?
Absolutely.
Hey, if you guys have suggestions, good trading music, send them into Team of Tackle Trading or let us know in the clubhouse, and we'll add some to the Spotify list.
By the way, I think I'll drop the link here in the chat. Let's jump right in the market. Matt, the market's not doing much here today. We're going to be talking bear call spreads for a reason. It is our Theta Thursday topic. There is a lot of news, but it is kind of a flat. Give us a quick overview of what's going on in the S&P.
First and foremost, S&P 500 kind of just staying into its neutral ranges here, up 6 points on the day, just really kind of hanging out here. And, a little surprising given the depth of the news we came out here. So just to I want to get you guys' take on this. I'm going to rapid fire through the news because there's quite a bit of news. Swiss National Bank announced monetary policy last night. Let's go ahead and look very quickly at the U.S. dollar slash Swiss franc pair. And drop this down into a nice little 15-minute chart here. And this is it was on the overnight, and this is kind of where the announcement came out. Obviously, it's really kind of settled in over the last 6-7 hours. But the Swiss announced monetary policy. They're maintaining interest rates where they are in the negative territory, but their language shifted to dovish, very similar to what was seen with many other central banks in the recent history. But they abandoned the LIBOR rates, is what they did. And for those of you who don't know what the LIBOR rates were, they're the widely used benchmark for short-term interest rates on the London exchanges. And there's been some controversy about LIBOR rates in recent history with some manipulation and whatnot. So the Swiss are abandoning the LIBOR rates, and they're going to what's called the Saron rates. And Saron, it reminded me, it wasn't what's that movie?
Lord of the Rings.
Lord of the Rings. Like literally,
Sauron.
Seriously, that's the first thing I saw the headline. I'm like, really? We're going Lord of the Rings, Swiss? What's going on here? But it stands for Swiss average rate overnight. And so it's just a creative way of saying that's their Fed fund rate is what we use.
I think it was about a month ago. There was a head and shoulders pattern. I don't think it was on the Swiss franc. I think it was on the euro intraday. And I posted on Twitter saying, when it looks like Sauron, I'm pretty sure it's not a good sign. It was a head and shoulders pattern that had like big spikes coming off it. Like
Swiss National Bank must be following you on Twitter because they follow.
I guess so. I mean, give us a like and share Swiss National Bank.
That's right, baby. Second headline here, guys. 2 oil tankers off the coast of Iran was attacked. And nobody knows who did it, and some fingers are being pointed to in Iran. But one was privately owned by a Japanese company. The other one was privately owned by a Jamaican company. Nobody got killed, but there was one injury, and the U.S. Navy is, investigating those oil tankers. And obviously, we'll talk about that with the volatility of oil. The biggest headline for me today was the Treasury Department. Their report came out this morning. And guys, it's time to celebrate. It's time to celebrate. Let's all give the U.S. Treasury Department a nice little golf clap here in honor of the United States Open, because we set records in May, guys. I don't know if you know this. We set records in May for how much money we spent in America. We ran a $208 billion deficit. We spent $440 billion, and we brought in $232 billion. I guess those tariffs are really filling up the coffers of the United States Treasury since we set a record in deficit last year. That makes my capitalist little heart bleed a little bit. $3 trillion year to date has been spent by the U.S. Treasury. And then number 4, the headline, and this is kind of why the market is holding up today. Trump declined to give a date on additional $325 billion in tariffs on China. That's the news.
Unbelievable. When you think about that Treasury thing, Matt, and obviously the LIBOR rates are a big deal. If you're a banker, if you understand international banking the way that it works, that is a big deal.
It was expected, though. I mean, when I first saw the headline that Swiss abandoned something, I mean, literally before I even went to the market to check the technical analysis, it reminded me a little bit of January 15th of 2015 when the Swiss removed the peg to the euro and went to a negative interest rate. So my first instinct was like, oh no, what did the Swiss do this time? But after doing a little research and reading a few articles, it was actually expected for the Swiss to do this. I didn't know about the new Lord of the Rings, overnight bank rate. I didn't know that, but it was expected.
Yeah, let's start with Disney if we can. Let's talk about Disney and the S&P 500, some of these companies that are jumping out. Whenever I see Disney at the top of the chart, 3.2% to the upside, Matt, that's obviously going to grab my attention. Give me a breakdown on the chart if you would.
Well, we talked about Disney yesterday a little bit as the snapback rally. I don't want to call it a retracement. So when you hear me say snapback retracement or whatnot, just assume that's a flag-based pattern. You have this little flag-based pattern coming back into the breakout channel. It retested and obviously had some good momentum coming in on the overnight. Currently breaking out of the previous level of resistance right here at 139, approaching those highs at 142. I mean, if you're an investor in Disney or if you trade Disney, you got to be happy today.
You know, they were upgraded at Morgan Stanley. As I look at the recent upgrades, so many of the companies, they just literally upgrade the price. I mean, they've been overweight at Morgan Stanley for a long time, but they raised the price target to 160. And that's that quasi upgrade, and obviously going to pop the stock here a little bit.
Well, if Disney was Beyond Meat, it would be $245 right now.
Probably. Yeah, that's exactly right. Other companies that are really, really jumping here today. I see American Airlines up big, 5.8%. Matt, AAL, if you would. I know we fly Delta a lot. We do a lot of flying ourselves, just as business people and speakers. We're traveling out there a long time. Again, another upgrade, you know, citing domestic fare increases. U.S. economy's been strong. JP Morgan came in and upgraded into a buy on June here. Give me a read on the chart.
Chart was in a bearish retracement, trying to set up for a potential trigger underneath that 20-day moving average on American Airlines here. Kind of blew that out of the water. Now you're breaking back up above the 50-day moving average. You got to move it back into the neutral territory if you're a trader.
Yeah, a lot of neutral stocks. Actually, Southwest as well. You know, whenever you see airlines moving, they generally all move together, Matt, as an industry.
Like moving together.
Delta Airlines out of all of them might even be looking the best here. Love is up, Delta's up. If you're going to pick an airline out of those three, which one you like?
From an investor or trader?
Let's talk trading.
From a trader's perspective, Delta, Southwest, or American. If I had to guess, if I had to take one, I wouldn't take any of them, Tim. I'd take Delta, but I don't think they're a clean technical setup there. You're not trading into the bullish trend, and whenever you're trading, you always want to trade in the direction of the primary trend. So the primary trend on all of these right now is neutral.
Mm-hmm. So many of the companies that are coming up off the bottom is where the market leadership is here today. You know, stocks that we were looking at for bearish opportunities, but then this oil move is propelling many of those companies. When Casinos is up, a lot of these other companies are up. Look at Nucor, if you would, though. See, whenever you have updated triggers, you know, I love this company as a bear setup in general, Matt, and you could have even had a trigger there yesterday. It's hard when you see the whole thing kind of flip back around in one day. If you did not trade this yet and you got a green candle here, does this throw you off? Are you waiting for more?
No, I mean, it's not breaking up above resistance yet. And if it triggers under yesterday's low, you still have a good trade there. So stocks don't go in lines. They go in, they jack, they move, they go up and they go down, they go up and they go down. And you certainly don't want to overreact to one day. I mean, I know Nucor's up 2% today, but I mean, the reality has zero volume behind that movement.
Mm-hmm. Mm-hmm. Other areas, Twitter is down. In fact, it's down almost 4% here today, Matt. Breaking back down. Had a really good earnings last quarter. In fact, I'm looking at the news right now. Twitter shares dive after analyst bearish call. A lot of analyst upgrade downgrades today kind of driving the market. Does that bring this back into a neutral condition for you? Because I was actually looking for some bullish opportunities on Twitter.
I think from a position perspective, anything above 35, you can be bullish there. I mean, that's a pretty solid level of resistance historically. But from a short-term perspective, if you're just looking at the relationship of the pivots, you do have downward moving pivots in the short term. You have increasing pivots on the long term. You're breaking down out of that symmetrical triangle, very similar to what you did over here. It's interesting. I mean, you got probability to the downside. But I mean, 35 is so strong for Twitter.
Two of my watch list companies are pulling back, Matt, into a bullish retracement pattern, AMD and CME. Strong red candles are not going to get me in today, obviously, but I do like the fact that we're starting to develop a retracement.
What did we say on Monday? What did we say on Monday? Give me 30.
Yeah, give me 30.
Give me 30.
I would love to find 30. 30 and a doji and a trigger, that would be a beautiful setup.
Well, and not only that, Tim, but look on the upward movements here. Look at the increasing volume activity on the upward movements. Look what's happening on this as this retracement is now forming. As this retracement is forming, you now have downward decreasing volume. That is a sign that this is just profit taking. That's all that's happening right now. And when you see these higher highs and you start to see these retracements come back down into that support level that you want it to come down into, and by the way, that's exactly where that 20-day moving average is going to cross up into as well. You want to see that decreasing volume because, again, it's an indication that the traders and not the investors are simply locking in profit.
Yeah, I agree with that. I mean, the reality is these pullbacks, though, we like to see them because then it gives us the reward to risk that we're looking for from a swing trading perspective. CME was one of the hottest ones. We talked about it in May when it broke out. We've talked about it during the entire month as trading volumes picked up and so much action going on there. Now you're finally getting a little bit of a retracement here, Matt. Big fat red candles are going to make you wait for, exactly what we need. We need that confirmation candle. We need that retracement. And I'm in such a great mood today. I love seeing those Fibonacci's because I have an abundance mindset. Maybe I'll learn something. Go ahead and put that up there on the chart. I'm good with it. All right.
There's your Fibonacci retracement series there. All Fibonacci, and I know you hate Fibonacci the same way I hate the VIX. But the only thing Fibonacci allows you to understand is where these zones of support could really form. And it's a very helpful tool to understand because a lot of times stocks, they like to retrace a certain percentage into moving averages, into previous levels of old resistance, new support. Well, when you're looking at the CME group in this price movement, this higher high relationship, I like to draw Fibonacci's because that gives me zones where these support levels could form. And I just like to get as much evidence as I can when I'm looking for a technical catalyst. And I talk about this in the step system as well. You have 5 levels of technical catalysts that can act as support or resistance. You have moving averages, you have significant whole numbers, you have trend lines, you have previous pivots, and then you have Fibonacci's. And any one of them can act as a catalyst. But if I see a zone where I have a 20-day moving average and I have a 38.2% retracement, that to me gives that support zone a little bit more credence because, Tim, not everybody trades like we do. There are people that still use Fibonacci the same way there's people that still use trend analysis. There's still people that use previous levels of support. There's still people that use moving averages. Everybody likes different things in the marketplace. And if I can understand and get more ammunition on different levels based on different understanding of catalyst, then I'm going to use it.
Yeah, I agree with you. There's no doubt about it. If you can find a tool, I don't care if it's Heikin-Ashi candlestick charts, changing the way that you use moving averages. If it's a defined, researched, well thought out tool that will help you build an edge and make more profit, well, I'm open to it. I don't
say one more thing to that though. Just because you find something, if nobody else uses it, it doesn't matter. It's random. It's arbitrary.
Yeah, that's right. Move on to the Dow Jones Industrial, if you would. We're going to keep breaking through the markets. And by the way, today, guys, we're going to be talking about some bear call spreads. And we actually found about 6 candidates that we're going to go through a little bit later in the show. Cody's got a list of them that Matt and I gave him earlier today. And we'll build some. We'll actually do some demonstration. And tonight in the Cash Flow Club, I believe we're going to be spending the entire show there over for pro members, Matt, showing them how the bear call spread works, what the rules are, how we build them all together.
And guys, when we go through those coaches shows these days, I mean, the coaches show on Tuesday and the Cash Flow Club on Thursday, we go through about 20 to 30 minutes just really walking everybody through the setup you're looking at, the rules you're looking at, how to apply it. We go through the playbook. Then we pull up the journals, the Theta Research Journal, and we research those things, show you guys how to research everything. And so definitely make sure you're watching that replay. If you not the replay, but definitely attend that Cash Flow Club tonight if you want to understand how to find, research, and place bear call spreads.
Well, let me ask you guys, if you're a pro member in the chat, do you like the new format? I've generally got a lot of good feedback. I'm expecting you're going to put that in there right now.
I personally love it.
I love it too. I think it's one of the best changes and additions we've had here at Tackle Trading. We come up with all kinds. We cook up all kinds of ideas, Matt.
We used to do the coaches show where we basically did the halftime report, right? Mm-hmm. And basically every Tuesday night we would do a coaches show, an hour coaches show, where basically we updated everybody on the news and what's happening in the marketplace. And now that we do that every day in the halftime report, we're really making those shows a little bit more special.
Correct.
And application, instead of just being aware of what's happening in the market, the fundamental ability to go out there and apply these types of strategies and techniques in the market. And I've loved it. I've learned things when I'm watching the replays.
Oh, I love doing them too. I think I'm very proud of where we're going. We're going to continue to build really amazing stuff for you guys. Dow Jones Industrial Average, Matt, here up about 1/3%. Whenever I see a market up 1/3%, I'm not going to get too cooked up. In fact, today would be a day for golf, right? I mean,
It is.
day trade in the morning.
Care about.
That's right. I mean, day trade in the morning, do a little cash flow stuff, run your
today is a day for golf. Today is the Open, or the US Open is today. Today is a day of golf. Period.
Thank you. Period. End of sentence. Pull the driver out, go big, go home, right?
Yes.
Cody, are you the type of golfer that if you think you can get it over the lake, you'll try, or will you take the safe shot down the fairway?
Oh, I'm definitely trying to get over that lake.
Go big, go home. He's a Texan, Matt. I knew his answer before.
I'm definitely going over that lake. I'll waste 3 or 4 balls, and then afterwards, I'll be like, all right, my shot's in the lake. I'll take the drop on the other side. But I'm going to hit another ball to see if I can do this. And
just a golf ball, right?
I'll tell you right now, I'll tink up that thing.
That's
right. Oh, one of the great movies and great scenes of all time, in my opinion. I love
Roy, baby. Roy.
In fact, put that on my to-do list. I'm going to watch that show. Dow Jones Industrial here, Matt. We've got 21 advancers, 9 decliners. The internals look fairly strong, mildly bullish here today. You could call that a pretty good candle if you were trying to paint a picture for the bull side of it. Intraday, we're actually rallying here in the last few minutes. Give me a read on the Dow.
Yeah, nice little hammer candle, but I mean, we're neutral here this week. It's forming a little bit of a high base right now, but it's too early to tell here. We got to wait to see some more price action.
Yeah, I'm looking at charts. Disney, obviously, we talked about, led the way. Home Depot, I've been talking about this stock, and guys, I like this signal. I know the reward to risk, Matt, if you're looking at that pivot, may not be opportunity, but I actually think it just from a relative safety standpoint, seasonal standpoint, I did like Home Depot above 200. Give me a read on this chart.
Yeah, 200 break out of a high base, reclaimed a significant whole number. The problem here is going to be you're buying at 202.38 with the resistance at 205 by 207.
Yeah, and you are also buying at the top of the range in the intraday, but I do like the stock in general. Kind of tough to find bulls right now in this market when you're at the top, Matt, right? So you look for certain areas. You look for the Disneys, the Home Depots, real technical triggers, and it is a stock picker's market.
I got a bull for you guys.
All right.
Go look at PayPal. That is my favorite setup, and it is a breakout pullback with the doji.
Similar to McDonald's and similar to the Disney one we talked about.
It's been on our option report a lot this year for a reason. It's been a good candidate. There's no doubt about it. And Cody, I think that is a good play.
Well, and here's what I love about it. Very consistent overall primary trend.
Mm-hmm.
Neutral over the last month. Breakout, retest, playing defense here. And let's just play a little bit more defense. But, these are scenarios where I call them cheap risk. Right? You're buying literally at support. You're putting a stop loss right underneath the breakout channel. And if it runs with you, you got a good return for limited risk there.
Microsoft's a very similar pattern, by the way. If you look at MSFT, old 130 resistance, now we're hesitating here. The hard thing is, for a Theta Thursday in the markets, I don't know if I want to add a lot of delta today. If I'm going to add something, it might just be cash flow over the weekend, and then look for better delta setups when the market decides to do something, Matt. Obviously, you can't ignore delta, and I'm going to be adding some delta, but it is just a mindset thing. What do you think here? Microsoft, same as PayPal, a little different chart.
I like the PayPal one. If I had to rank them a little bit, I do like the PayPal one a little bit more. You're forming a little bit of a high base. I know you're playing defense on the breakout channel at 130, but it did run into it. Playing defense, you got to like it, but I do like the PayPal one just slightly better.
In the chat, type in the words options report, because I've got an option report candidate we put out there last week, Matt, 3M and 3M. Talk about a setup here. Hesitation candles on the intraday. You've got clear support that if we break below that support level at 168, Matt, that's just a really good technical trigger.
Yeah, easy trigger. And that's what, when you're looking at this, and if you notice what I did, I just went from the daily chart You're looking at the technical signal on the daily chart, bearish downtrend, bearish retracement, consolidation. And when you see that consolidation, you don't want to just look at the low of the day, Tim. You want to drop that down into a 30-minute chart and then highlight this, and you see that neutrality happening over the last 3-4 trading days. And I just put that right there at about 168. I think a trigger underneath 168 definitely works here on 3M.
I'm with you. All right, moving on to the NASDAQ 100, if you would. And NASDAQ actually up a little bit, just a hesitation more than the Dow.
Where's Lulu? Where's Lulu and Red Hat?
Lululemon.
We got to talk Lulu and Red Hat, bro, before we go on to, I know those are small and mid cap. When do you want to talk about Lulu and Red Hat earnings?
We can talk about them right now. I was going to move on to the NASDAQ and actually talk about some tech companies, so we can get into Lulu. Is going to be
Let's get Lulu and Red Hat out of the way. Both reported earnings yesterday, Tim. So let me just give you the update on the actual numbers. Lulu comes in at 74 cents a share versus the expectation of 71. So a beat on earnings per share. They also beat on revenues at 782 million versus 757 million expectation. Had a slight increase in guidance, but I want to get you guys' take on this. The word coming out of their earnings in their earnings call is they're going to now start targeting men for that type of apparel. Do you think that's a wise approach by Lulu?
Yeah, for sure. Yeah. I already think men buy. First of all, I own a pair of Lulu pants. They're not yoga pants, but they're travel pants, and I love them. They're one of the best things. I had them hemmed. I paid premium for them. Cody is smirking right now. This is not flying with Texans. I'm going to tell you right now. I absolutely think it's
keep digging that grade, buddy.
All right, hold on. I'm gonna look
I'm sitting here thinking to myself, I'm like, all right, Tim. I mean,
Tim's got the tight pants on.
They're not tight. They're actually just very comfortable pants.
He's got the tight pants on. Listen,
hey Tim, you know what? My wife says yoga pants are very comfortable. So I don't mean you.
Oh, you guys!
Everybody, I need a picture of Tim wearing Lulu workout gear.
Matt, you have Lulu pants yourself. I know you.
Yeah, I do. I do. But let me explain the difference. My wife bought me them, and I haven't worn them yet. So there's a difference. I will tell you though. My favorite hoodie I wear all the time, okay, is a Lululemon hoodie. It is. It's the most comfy hoodie I own by far.
They're not pivoting. They're just expanding. I mean,
but yes. And I mean, there's nothing wrong with their men's products. As a matter of fact, I just pulled it up to look at some of their workout gear. It looks like normal gear.
Yeah, it's normal gear.
The reason there's even the joke there, and the reason that we're able to just poke fun just now is that they built their brand as a female apparel branding. So trying to add in that, they have to now break out of that female only apparel that they've worked so hard to brand themselves.
I think Blake just called Tim Nacho Libre.
Oh, I'll have to get the luchador mask from Noah and put on some stretch pants. There's no doubt.
Oh, no, it does have that mask, doesn't it?
Sure it does. I love the company here, Matt. A gap out. Obviously, a backfill intraday is not what you want to see.
Profit taking.
That actually throws a wrench into a lot of swing trade setups for me.
It does. I mean, when you see a gap out like that and it immediately fills the gap range, and remember, you have all these different types of gaps. You have runaway gaps and breakaway gaps and catastrophic gaps, exhaustion gaps and common gaps. And if you understand gap relationship, it's all about reading the price after the gap. And when you have that snapback, profit taking, come right back down, fill the gap, it just leads me to the conclusion that that's an exhaustion gap, which typically has price depreciation coming back down into support levels. So it does throw a wrench in the analysis, no doubt about that. Moving on to Red Hat, the second one that came out here, RH. Now, when we're looking at RH here, let me give you the actual numbers here, and I want to get your take on it because this is a trend changer type situation. Red Hat comes in at 1.85 earnings per share versus the expectation of $1.54. Absolutely demolished earnings per share. Great earnings per share there. Came in at 598 million versus 583 million. on the actual revenue. So a beat on earnings per share, a beat on revenue, and they also increased 2019 full year on guidance as well. Obviously, overnight action, gap up, kind of fading back down. This to me is just kind of a wait to see how it's going to play at this 110 level. You certainly could see a little bit of consolidation at this 110 level. Obviously, you don't want to be buying on this, today. Wait for it to slow down. Wait for those moving averages to perhaps catch up to it. But that's a trend changer in my opinion on RH.
Yeah, definitely.
Good earnings report.
Well, there's a lot of patterns.
Red hat. Excuse me.
There's a lot of patterns that can develop from here, Matt. You could even just keep running. A breakout of 120 is tradable right here, by the way.
Yeah, and James is right. I was saying Red Hat. I was just, for some reason, I had Red Hat in my head.
Robert Half.
It's Restoration Hardware, and I think my wife contributes to their earnings as well.
I gotcha. All right, back on the NASDAQ, some of these big names I want to talk about here for just a bit, Matt, if we can. Let's take a look at the NQ contract. I mean, here's the thing. It's been more weak in my perspective from the chart pattern, but some of the companies are running. Yeah, I mean, Amazon's about to break out of 1900, which would be tradable. Give me a read on tech in general.
It's the same thing we're looking at in the entire market this week. It's consolidating at the top end of its channel. It can either be a high base type situation where we break and run, or we still have retracements in play here. So I think patience is in play. Wait for the signal in the marketplace. If the market starts breaking out, you're going to have a lot of good opportunities on some of those bullish picks. If the market does start its retracement, which we don't know yet, I would love to come in and be like, this is what's happening. This is what we do. But we need to see more data. We need to see more evidence. We need to see more price action. The market's forming a little bit of consolidation in every one of the indexes right now. And the probability for me right now is 50-50 when you're talking about whether we break out or whether we start retracement. And we could start to see this starting tomorrow, Tim. We do have retail sales coming out tomorrow.
Well, and you even see it within the individual components. I mean, just look at Amazon and Google. I mean, Amazon is showing you that if it broke out, you'd want to buy it, right? Because a break at 1900 is a tradable signal. Same kind of pattern as the overall NASDAQ itself. In fact, you could even paint a picture that's a little bit better than the NASDAQ itself because we're above the MA instead of below it. Trigger up above 1900 is tradable for me, Matt.
I could see it. I could see it. Yeah. I personally wouldn't do it. I would sell bull put, but yeah, I can see it.
But then Google is one of my favorite bearish setups on the whole market. It's up 1% today because the market's up today. But I really love the downtrend. So you've got mixed action. It's not very common where you're going to see mixed action between the big FANGs type stocks, Matt.
No, but you definitely do right now. Between the Facebook and the Googles versus the Amazons, you do have a mixed market. And we've been talking about that every day for the last 2 months. It's a stock picker's market.
I agree. Give me a look at Lyft. We haven't talked about this stock in a bit. Inverted head and shoulders breakout developing here, Matt. If we are now, we almost 2.5 months into this thing, I got to tell you, a break at 65. I love this setup.
See, this is what Kramer should have waited for when he's pumping Lyft. He should have waited for the technical analysis to determine where the price is going to go. And so when you're looking at an inverted head and shoulders type formation off this bearish downtrend coming out of their IPO, you have a clear level of support right there at 55. You have a lower level of support right there at 47. And then you have another level of support coming back over here at 55. So you have the left shoulder, head, right shoulder, and look at that consistency of the neckline right there at about 63, Tim. A clear trigger above 63 on Lyft. So, I mean, this is what I like when I'm talking about IPOs. I want to wait for trends to start to develop. I want to start to see that 20-day moving average come in to play a role. I want to start to see how Wall Street acts at certain levels on the price chart, and Lyft's looking pretty good above 63 right now.
What did Slavic say word for word yesterday? Just crush it.
Just crush it.
Just crush it.
I can't remember. You spotted the signal. Go crush it. Get that money.
It wasn't crush it. It was kill it.
Kill it.
Kill it. You went Eastern. Just kill it. Get that money. You deserve it.
I love it. I'll give you another one now that looks really interesting right now. Take-Two Interactive, Matt. A little hesitation, retracement. Probably not even a retracement. It's our game of the day every day. Is it a retracement or not? And Matt always says,
So stupid. No,
it's not a retracement, but a breakout up there on a little high base here, Matt. I would like that signal. Take two is in a reversal pattern, doing really well for most of this year, actually. After they gapped down in February, they had good earnings in May, and now they're starting to develop an uptrend.
By the way, it doesn't have to be a retracement for you to trade it.
I know.
I'm just a stickler for calling patterns the right pattern. That's a flag.
Yeah.
Okay. And the trigger here, and there's a difference in the trigger. On the retracement, you're looking at a pivot relationship. You're looking at the high of the day. You're looking at 30-minute charts. When you're looking at this type of pattern here, you're looking at the breakout of that trend line, and that's what it did. That's a clear trigger for me.
I agree. Take a look at Match.com, MTCH. I don't know what to call this pattern. Do we need a breakout up here at 75 for you, Matt? Little ascending triangle developing, little tiny cup developing, no handle yet.
This was a retracement, and now it's approaching the next level of resistance. And so if you got it on this candle or this candle, that's fine. That's the retracement you're looking for. If you don't get on that, you got to wait for the breakout of 75.28.
One more bullish one out of these NASDAQ large cap stock, Tractor Supply, TSCO. This was an option report pick from a couple weeks back as well. And it's been a good performer.
Do you have an affinity for trading companies like Tractor Supply?
I like them. I like Tractor Supply.
I do too.
Yeah.
I like the railroads. I like Tractor Supply. I like John Deere. I like Home Depot. I just like these types of companies. Good little nice little primary uptrend here. Just broke out of the previous level of resistance at 106. Snapback retracement coming back up, back testing that 106. Confirmation today, and so that looks like a pretty good trigger. If you're a little more cautious, a little more conservative on your entries, you got a clear trigger above 109.67. You might want to wait for the breakout of 110. Stock
currently neutral, but I'm very concerned about it if the market does pivot back to the other side. Give me Netflix, if you will, Matt. It is sitting on a 6-month support zone, and it has underperformed the markets. I know that if you look at it from a big picture, you're going to just call it neutral. Most people would. But, Matt, I see a breakdown potential here on this stock.
That is a bearish engulfing candle if I've ever seen one. On
that weekly chart I was looking at?
That weekly chart, that was a bearish engulfing candle. With the breakdown pattern setting up here, this thing could get ugly for it.
It could get ugly. That's the bearish engulfing candle Cody was talking about on the weekly chart. Upward off support, downward coming into it. You break 340. If you close on this weekly below 332, it could get ugly.
I'm just saying, so much of trading is preparation, Matt. You don't necessarily pull the trigger on everything you're looking at. You keep watch lists for a reason. And a lot of what I like
generates ideas.
Yeah. A lot of the things I add to my watch list is if this, then that type of mindset. If the market does not hold this, rally that it's doing and it does turn back down, what kind of companies are set up for big moves to the downside? I think that is one right there.
That would be one of them.
Yeah, definitely. RTY, if you would here. Let's keep working through the markets. I see nothing new. What do you see?
It's trying to get up above those pivot points, and it's currently sitting at the highs of the week. When you look at this from an hourly chart, you can kind of see it sitting at those highs right there. If it can break out of these highs, Tim, the Russell can catch up to the marketplace. I mean, the Russell, out of all the different indexes, the Russell can fly. And if it does break out of that level at 137.90, you should see catch up to the market, because remember where the market is. If you're looking at this on the S&P, or if you're looking at it on the Dow, or if you're looking at on the NASDAQ, they're all up into these ranges up here, Tim. The NASDAQ's right here. The S&P and the Dow are up into these ranges, and because they broke their pivot relationship. So if the Russell does close above that, yeah, it can get into 1560 fairly quickly.
Some charts that are grabbing my eye at this size. Callaway Golf. We're talking about golf being, the story of the day here. ELY, if you will, here, Matt, gapping out. That looks like an earnings gap, but I know that it's not.
That's not an earnings gap. That just might be like, hey, somebody's using Callaway clubs at the Open today. I don't know.
No. Janet builds a stake in Callaway Golf, plans to push for the sale of the company.
I was joking, but breakaway gap, breaking out of resistance right there. If you can maintain above 1770, that's a breakaway gap, should start a new trend.
Yeah, I agree with that. And let's move on to the other markets, currency markets. You kind of talked about it a little bit. Dollar here, not much going on, 0.03%.
But you're starting to see these bearish retracements come back up and retesting that 97. Obviously, slowing momentum candle here at that 97 mark. Any downward movement in price, you should have some opportunity on the short dollar type trades here.
Yeah, I would agree with that. Crude oil is probably the story of the day. Cody, what happened with those attacks that we know so far? I know you probably looked into the news. What was it going on with those tankers being bombed?
I actually haven't looked into it as much as I probably should have. All I know is that all the headlines started stating, oil supply fears helps oil up. It's not up as much as the headlines made it sound like it was. Maybe it was this morning when they put it out there.
The headlines made it sound like oil is at $100 a barrel.
Yeah.
That clickbait nonsense.
Yeah, no, it did. Tanker attacks in the Gulf of Oman stoked security and oil fears. It was just off the coast of Iran. I don't know much about the attacks. If you're out there and you're halftime crew and you have more detail as to what caused them, or if we know anything.
Nobody has stated anything about who did it. Nobody's claimed it. Iran has denied it. It was not a government operation. They weren't government oil tankers. They were privately held oil tankers from Jamaica and Japan, respectively. The U.S. has came out and condemned it. Talk between the U.S. and Iran has escalated, but this so far, from a trading or an investing perspective, there's nothing to see here so far.
Yeah. I don't know much about it. I know the price action, and the price tells you everything. Price is king. In fact, in the chat, type in price is king. It is that the nature of it, Matt. We started to move higher. That candle and that tail, break that down for me.
Well, the one thing I will say before we break down the analysis here, though, Tim, is this is what trading oil feels like sometimes. When you have increased variables and you have increased tension in the Middle East, and there's so many different factors from supply to demand to oil output numbers out of the U.S. versus oil output numbers coming out of OPEC to tankers getting bombed or pipelines getting bombed in the Middle East or conflict. I mean, when you're trading oil, there's just there's an increased variable that trading other instruments don't have.
Yeah.
Same thing with currency, by the way.
Yeah, it's true. Because it's so sensitive to everything that's going on.
So quick read of Wall Street Journal article basically says that no one knows who did it. No one's taking credit for it. They were two sophisticatedly timed bombs that went off within 45 minutes of each other on two different tankers. Both crews have abandoned ship. No one's been reported injured so far, and they're pretty much just watching these things float and burn in the middle of the sea right now.
Yeah, I saw some pictures of the damage. Are the vessels threatened? I mean, I think they're going to get towed.
Yeah, obviously environmental damage, but the big thing is the political risk. I mean, obviously it's going to stoke. Anytime you hear oil tankers attacked and bombed off the coast of Iran.
Oh, the headlines were horrible. Yeah. I mean the headlines were horrible, but I think you got to wait to see a couple days here to see kind of how this plays out.
Well, and the price action,
tow it until they get that fire out first, though.
Yeah.
Right. Why would you tow a on fire bomb into port?
Well, obviously they're going to try to put the fire out. I just hope it doesn't escalate into something bigger than what it currently is.
Mm-hmm. I agree. Intraday, Matt, it's not holding the rally though. In fact, it's given half.
No, it is not. No, it is not. And when you break this down, this is where the news came out, Tim. It was literally in the overnight action for us here in the U.S. And you saw that news come out. And the first initial spark was, "Oh my God, what's going on?" And that's when you get this, "Oh my God, what's going on?" Oil up, 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 up. And then when you kind of wake up in the morning, you realize, well, we're not going to war, and this was not a government action. And the fears the fear of the overnight might have been a little bit too exaggerated, and then you see it come right back down. And that's why I say, when you're looking at this from a daily candle, you're looking at this and you're saying there's really nothing to see here. The pattern hasn't changed, support resistance haven't changed, pivot relationships haven't changed yet. And so from this perspective, the headline led you to believe that something was going to happen, and it just didn't. I still have a trigger underneath $51 here.
Yeah, I'm with you. I'm with you. I think below 51 or even below 50, even you add to that position intraday, you could probably do some day trading in here if it breaks down from these levels now.
Well, if you're looking at it from a potential day trading perspective, look at that clear area of support right underneath 52. So you
Yeah.
have that you have this intraday action right happening at 52. You have this little base over here at 51.70. You have some day trading triggers there, no doubt.
Yeah. All right. Let's keep moving through the commodities market, if we will. Across other energies, obviously, all the other ones, they just kind of move with it. Natural gas is still ugly, by the way. Just an update.
It's
Natural gas
gross.
is ugly. It's been
It's just
ugly. It's been
gross.
bearish.
It's so gross, and it's going to get worse.
Yeah. And the metals market, gold is rallying again, up 0.5%, Matt. We are heading higher. By the way, I know we had our little, square off, and you won the gold debate. You got the point for it. The St. Louis
Are
Blues
you still
did win.
salty? Are
Yes,
you
I
still
am.
salty?
The St. Louis Blues won the Stanley Cup. I did not get the point for that. I want my point back. All right. They did win last
First of all,
night.
you did get the point for that because you stole Bill Burr's argument and Mark gave it to you. What are you talking about?
I want it for Toronto too when
Do
Toronto
I do
wins.
I do I have to replay this for you?
Oh, gold hitting a high here, Matt. This is probably profit
That
taking
looks like it
zone.
gets the low. Look for the break above 1350.
Yeah, there's nothing to see here until we get a true retracement or until we get a true break.
Yep, and Bitcoin, last but not least, is
By the
up
way, congrats to
again.
St. Louis, though. That awesome.
Oh, they were a stellar team.
Did you
Awesome for
watch the
St.
game?
Louis. I watched a little bit of the game. Yeah.
Yeah, I watched it. It was
Yeah.
it was incredible. Just the way that they dominated the ice, the way that how physical they were. I'm not a big hockey guy, as well stated, but I enjoyed the game quite a bit. I'm not a fan of any of the teams. I don't really care, but
Yeah.
it's an incredible game.
They're the ones that knocked the Stars out early, and I remember watching them. They completely dominated the ice. They were like something crazy, like 90 shots on goal or something like that.
Mm-hmm.
I mean, I'm surprised our goalie even held up that long, but they were always holding the ice. So the fact that they won the entire Stanley Cup doesn't surprise me. They're a phenomenal team this year.
Yeah,
I don't watch a lot of hockey, but the Stanley Cup is something special. I mean, it just is. That thing. And the number one thing I like about the Stanley Cup is after the winner is declared, right after the game, the camaraderie amongst everybody.
Mm-hmm.
I love that. The shaking of hands, congratulations. I mean, that's always fun to watch. And congrats to St. Louis Blues.
St. Louis Blues.
They had the worst record like 2 months into the season, guys.
It's awesome.
Yeah, it's awesome.
Who doesn't love a redemption story? I mean,
everybody loves.
Yeah, that's awesome.
That's why I can't wait for Tiger to win the U.S. Open on Sunday.
Also why you should
see that. I'm not. Well, never mind. I'm not going to get in that.
It's also why you should love Bitcoin right now. Talk about redemption. This is the bubble that popped that now is on the way back up. Head and shoulders developing that, but I don't necessarily see weakness. I do see a potential for a breakout here and actually just a lot of strength. I know it's not tradable. We've talked about it a million times, but it's just amazing to me how strong it's been, quite frankly. I look at it every day and it just amazes me that we're not seeing more weakness.
It's showing fairly good strength over the last week. Price appreciation, it's starting to slow down the volatility. As a trader, I just don't like this up and down movement trying to trade into those ranges. It's so difficult. It's very hard to find clean triggers, where to place stop losses. And like Mark was talking about in the podcast this week, what's the kryptonite to trading, to technical analysis? It's variables, and Bitcoin has a lot of those right now. It's the unknown.
The thing about Bitcoin is you have to go off the technicals, because before it was purely speculation because we didn't have any technicals. And if you say, okay, let's compare this to a stock of a company of sorts, well, those companies will put out earnings and guidance and where things are moving. Bitcoin doesn't have anything like that. Oh, okay, let's say it's more like a currency. How are currencies measured? They're measured based off of economic GDP, growth, jobs. Bitcoin doesn't do that either. So the reason it's so choppy is there's nothing to really show any intrinsic value of the device itself.
The only thing I can relate it to, and I was not trading around that time, I wasn't born, but when gold was reintroduced into the futures market in the mid-1970s, extreme volatility, up and down relationship, bubble-like conditions, same thing with silver. I think you got to analyze it like that. I think you got to analyze it like a commodity or a currency, not a stock.
I love it. Yeah, I think so. I think that's a good call. Good.
You do have a rising intraday trend line on the 30-minute chart. You have a horizontal resistance line right there at about 82.62. A break of 83, maybe.
Yeah.
I could say that.
I could see that as well. And guys, we've got 10 more minutes. What we're going to do with the last 10 minutes here is actually break down some bear call spreads. And then we'll kind of do a couple of calls to action at the end. But Matt, the market right now, when you've got a market like this, you work through it methodically, step by step by step. And then you go apply new systems, or you apply the systems that you know how to trade. Bear calls are a very, very core cash flow strategy. Give me the high level 60-second elevator pitch style. What is a bear call spread and why do we use them?
Well, I think the difference, understanding bear calls versus bear puts or bull calls versus bull puts, is really the difference between understanding delta versus theta. When you're talking about delta, you're talking about a directional type of trading system. You make money when you're right on your projection. So you buy a call option, it has to go up in value. You buy a put option, it has to go down in value. Same thing when you buy a stock or short a stock. That is delta trading. When it comes to theta trading, it's not about picking a direction, although you do want to trade in the overall direction of the primary trend. It's still not about picking a specific direction. It's really about saying something's not going to go somewhere. So the difference between delta and theta is saying one will do something versus saying one will not do something. And in theta, we're basically just saying that it won't do something, and we create strategies like bear call spreads or bull put spreads or iron condors, these credit-based trades to cash flow in the market. And if it doesn't go to those certain ranges, then you're profitable. So for example, if I were to buy a put option on Google right now, well, I would wait for it to trigger underneath my trigger that I have. I put a stop loss above the resistance channel. I would target the previous level of support, and then I would use potential average yield to target that next level of support. But when it comes to theta trading, I don't have to do that. Delta's playing man-to-man. If you're talking about the NBA game tonight, right? The NBA game tonight, they're going to play man-to-man defense or they're going to play zone defense. Delta's man-to-man, theta's zone. And so in terms of this zone, all I'm going to say on Google here is I don't think Google's going to go above 1150 in the next month. That's all I'm going to say. And then I create a strategy that cash flows in that environment if it does not do that. And so, for example, if I come out to the market and I say, okay, let me go out 36 days, let me go look at that 1150 strike price that I was looking at. I got an 1150 strike price right here. That has a delta of 24. So I identified my resistance level, Tim, that I wanted to sell above. And then I go apply my theta rule or my delta rule, which is a strike price. And I say, okay, let me sell that 1160 strike price. Let me do a vertical spread. Since Google's over $1,000, let me change that out to a 10-point spread. And I'm going to get paid $1, and I'm going to get paid $1.75 against a buying power of 825, which is a 20% return on investment on a 20 delta, which is an 80% probability of cash flow and 20% ROI over the course of the next 36 days. And as long as Google in that time frame does not go above 1160 right here, 1160, I'm going to be profitable in that environment.
Yeah.
Google can go up a little bit, Google can go down a little bit, it can stay neutral as long as it doesn't go above 1160. And for it to go above 1160 here, Tim, it's not only going to have to break out of its trend, because the trend is bearish right now, it's got to break out of 1100. It's got to break out of this pivot point of 1125, and it's got to reclaim that 1150 mark, which means you got to go above all these moving averages as well. You have multiple levels of resistance that can stop that. So for this trade not to be successful, Google not only has to reverse its trend, it really's got to start a bullish uptrend.
Back to the trade tab for a minute here and show me some of the numbers. I'm building the spreadsheet over on my side while you're doing this a little bit, and I love the analysis. Okay, so you did the 1150, is that right?
No, I did the 1160 by 1170 is what I did.
Okay, so the short strike 1160.
When you're doing this, guys, when you're applying any option technique to the marketplace, the first thing you have to select is the amount of time in the contract. And when I'm doing covered calls or naked puts or credit spreads or anything in that area, I want to work around that 30-day number. Now, I do have a weekly contract at 29 days, but if I have a weekly contract 29 days and a monthly contract at 36, I know I can get the liquidity of the monthly contract is just going to be far superior than the weekly contract. This monthly contract has been traded for years, Tim. Years. This weekly contract's been traded for about 3 weeks. And so you're certainly going to just have a little bit more liquidity on the monthly contract here. So the first thing I select is the theta rule, which is closest to 30 days, but I'm going to go to the monthly. The next thing you have to select is the strike price you want to sell. Now, typically speaking, most traders will sell between a 10 delta or a 20 delta type contract. So you're really looking at your 10, your 15s, and your 20s. If you want to be aggressive, get a little bit more cash flow, you sell a 20 delta. If you want to be a little bit more conservative and get a little bit more range on the ATR, you sell a 10 delta. You're certainly going to get a little bit less credit, but you're going to get a higher probability of success. So I'm going to start with that 20 delta. But the reason I chose the 20 delta is I came to the chart and I found a level that I wanted to sell above. Sure. So a lot of times traders will just focus on their delta rule, and that's fine. Delta is based on probability. But I just personally like to also look at the chart too. So I identified a level on the chart. I went to here and I sold a 0.20 delta. It was the 1160 contract. I then created the spread with a 10-point spread because it's above $1,000. I did a 10-point spread to create the credit at 1170. So you're short the 1160 contract. You're buying the 1170 contract, and all you have to do is just right click, sell. And yes, I know you can hold shift and click and all that jazz, but just change that to 1170. And now you're getting paid 170. So simply by waiting the last 3 minutes, you've given back $5.
Sure. And do another, and then I'm going to show the spreadsheet and I'm going to show a couple other things before we kick, but let's do another. Cody, I gave you, go to the chart real quick. We're going to rapid fire through all the stocks I gave to Cody. Okay. Cody, you read them out. Matt pulls them up.
Amgen.
Okay.
All right. Baba.
Okay.
Deer.
What's Deer?
DE.
DE.
Yeah, DE. All right.
FedEx.
Okay. Earnings.
Yeah, throw that one out.
Got to throw FedEx out. Google, which we just looked at, and Facebook.
Pick one more, Matt.
My favorite two are Facebook and Baba.
Let's do Facebook.
Both I like. I like both Facebook and Baba here. I think they're both cleaner technical.
So, yeah, I think Deer was a little bit too extended to the upside.
And by the way, if you're watching us right now, I know we're going through this pretty quick. We're going to spend a full session tonight in the Cash Flow Club.
And Tim's going to show you. Tim's going to show you the research spreadsheet here in a second, and that's basically what we're doing, guys. So we're just getting the numbers. Tim's going to show you the spreadsheet, and then in the Cash Flow Club tonight, they're going to go through all the detail on it.
Give me the numbers
here on Facebook. Let me see where my delta relationships are. Okay, so you're 190. You're probably 190 by 195 on Facebook. That puts you right above that level right there. If you could get something above 200, I mean, that's beautiful, but you can't. So we're going to do the 190 by 195, Tim.
Okay.
It's got delta 0.21. I'm going to keep it at a $5 spread. Credit is 77 cents against a buying power of 422.
Okay.
You ready?
Yep.
Okay. Go ahead and share your screen.
Here's the bottom line, and you bet. All right, I'm going to put my mentor hat on. And by the way, guys, my job as a mentor is not always tell you what you want, it's tell you what you need to hear. You need to do research. You need to run numbers. There are not shortcuts that you're supposed to take in the market outside of just process, okay? And I want you to type in the words tackle theta spreadsheet. Tackle theta spreadsheet. If you were ever a legacy student, went to a legacy event, you would have got a gold key. And on that gold key, you would have had a file called the Tackle Theta spreadsheet. If you're a Tackle Trading Pro member, you can get those Tackle Trading journals on the website and download this spreadsheet directly. It is a lifesaver. It is the culmination of Matt and I researching and working through mentorship and trading for the last 14 years. I remember the original iterations of this spreadsheet, Matt, and what it did and what it had and how it's developed over the time. I'm not going to tell that whole story. Maybe for a podcast, we can go through all of that. But just right here, instantly, by plugging in the numbers between Google and Facebook, I now have data and context and understanding on how to make a decision on which bear call spread to trade. You know, the price, the ATR, the month, the days till expiration.
Can I say something real quick, T? But it doesn't just say that. It doesn't just say which one you should trade. It also tells you if your numbers that you ran are accurate.
Correct.
And the thing I'm looking at right here is I'm looking at that standard ROID at 88% on Google versus 72% on Facebook, and I'm combining that with an ATR of 2.4 versus 2.1 on Google versus Facebook. That tells me I might want to give up a little bit of my return for additional ATR buffer. I might want to adjust that 1160 strike price to the 1170 strike price so that I get more range on the ATR, because I'm getting a really good credit. I got a really good probability if you combine that with the ROID. And for those of you who don't know what ROID is, that's an indicator I created. And it basically takes ROI and it divides it by the delta, and it gives you specific parameters over, basically if you're actually getting a really good credit. Historically speaking, when you were looking at learning how to trade credit spreads, they would basically state if you got 10% of the spread, you're good. And so basically on Google, it would say, okay, if you got a spread of $10 and you're getting $100 or, whatever it is, that's really, really good.
Mm-hmm.
But that is such lazy analysis, in my opinion. It is extremely lazy analysis, in my opinion, because it does not take into account probability. It doesn't take into account your ATR ranges. And so what I did about 6-7 years ago is I started doing a little bit of research on delta, and we created these standard rules about what ROI and delta is. And so ROID is the number one factor, and ATR ranges are the number two factor when I'm looking at that spreadsheet. And so it's not just about which one you should put. It generates ideas if you're being too aggressive on the delta you're selling because of your ATR ranges. And so if you guys, if traders are not filling these spreadsheets out when you're looking to make 3 or 4 or 5 different credit spreads, you're making a really big mistake, because you're not taking into account delta. You're not taking into account ATR ranges and ROID and so forth. So it does two things. It tells you, it breaks you down trade by trade, but also if you know how to use the spreadsheet, you can start looking at that. The first thing I looked at, Tim, was I saw green on the right, I saw yellow on the left, and I'm like, maybe I should give up a little bit of my profit for additional range.
Correct. Yeah. And cushion is actually, it's a really, really good point there, Matt. Cushion is one of the most important things. The ATR buffer does help you analyze that cushion. And generally, whenever I'm mentoring somebody, I always tell them, guys, if you're going to make one trade, you should probably fill out at least 3 to 5 different opportunities.
Tim, let's fill one of these out. Let's fill out the one on BABA just to show people how the numbers automatically are generated. Because Linda, the numbers, you don't have to figure out the buffer. The spreadsheet's going to do it for you. And so let's look at BABA real quick, Tim, and I'm going to give you the same type of analysis. I'm just going to give you the numbers. You fill it out, okay? Price 160.17. ATR on BABA, current ATR on BABA is $4.14. Month is July. We're working 36 days on the contract. Okay, so the short delta is a 20 delta contract at 175. We're going to bracket that in at 180. Okay, and the credit on there, just give me 1 second. Let me get the credit. Credit 69 cents against 431 in buying power. And so as you can see, it automatically started filling out the data. And here's what I like on the BABA trade. Some traders might look at that BABA trade and look at the ROID and be like, oh, only 67 on the ROID. But look at the ATR range. I have, against Facebook, I have 1 ATR better range on Facebook. I have a 1 standard deviation where I don't have to worry about BABA that I would have to worry about Facebook. Yeah. So if you're comparing Facebook against BABA, and if all you're doing is looking on return on investment, 15.2% return on investment and 72% on ROID, I think the BABA trade's a better trade.
Agree. I actually do agree with that. I mean, the chart obviously has different issues in there as well, but you cannot just look at the ROI numbers. It is one component. In fact, Matt, I always talk about the 3 C's of credit analysis, and that's chart, cushion, and credit. The credit numbers are the performance metrics over here. the chart we went and evaluated earlier, and this cushion is going to be done through the ATR buffer. But the big call to action here, guys, I'm going to give it very, very, very simple. Go to the journals tab, tackletrading.com, trade center and journals. I'm going to give the link here in the chat, and download the Theta Research spreadsheet.
It's free for all pro members, guys.
3 different buttons right here. Trade Journal, which is the individual trade journal. You need all 3 of them. Theta Research spreadsheet, and make sure you get that. And there's actually 6 different tabs in that Theta spreadsheet, Matt. Covered calls, short puts, bull put, bear call.
Yeah, and I love what you just said there, the 3 C's. Chart, credit, and cushion. It's not just the numbers, it's also the chart as well. And when you're a new trader, you always focus on credit. Everybody does. It's like, oh my God, I can get 20% credit in a month. And they're just like, oh, that's just life-changing. It's like, yeah, wait till you're a veteran trader and you'll be much more happy selling a 10 and a 15 delta so you can get a little bit additional cushion.
And then tonight as well, we're going to go through the playbook, actually PowerPoint driven. We're going to spend time on that. Then we're going to show you how to do these in our cash flow clubs. I love all this stuff, Matt, but I'm looking at the clock and I don't want to run too long here. What have we missed, if anything?
I don't think we missed anything today.
I think we're rocking and rolling here. Had a lot of fun here today. Guys,
somebody gave us a down thumb. Hey,
that's okay.
Usually it's an accident, actually.
I don't mind. I mean, listen,
if you don't have a down thumb every now and then.
You know, I'm looking at the greatest Hawaiian restaurant in Utah, and it's only rated 4.9 out of 5 stars. So somebody downgraded it. Somebody was foolish enough not to love that mac salad.
Which one?
Mo Betta's. We're going to lunch there, Matt. I'll take you. It's right by my house. Mo Betta's. Authentic Hawaiian food. Betta's. Cody, you get a nice hot lunch plate. You know, beautiful. I know you're
authentic Hawaiian food with a man who's sitting in Hawaii right now. He smirks.
I know the difference. Oh, c'est la vie.
I'm actually, I think it's either this Friday, so it's either tomorrow or next week, going to Luau. So I'm looking forward to that one. That's going to be.
I showed my daughter a picture of a luau, and she won't eat pig anymore.
Oh.
Oh, that's funny.
Like literally, she won't eat. We were at the grocery the other day, and we were getting some lunch meat. And I'm like, "Do you want turkey or ham, honey?" And she goes, "Dad, I am not eating pig." It's just like, oh, honey.
Oh, just wait till the bacon comes around and be like, "Oh, honey, can't eat it. It's pig." I mean, she's like, "Wait."
Are you kidding me? I'm gonna go put a luau in my backyard. That's my response.
Get a pig in the ground. That's right. That's country style right there. There's no doubt about it. Matt, great job today. Cody, great job today as well.
Great job, guys.
Tomorrow, we're going to be doing Friday Fun Day. Guys, if you have requests for Friday Fun Day, any ideas, any topics, any thoughts, things you want us to cover, hit me, Matt, or Cody up on Twitter, or team at Tackle Trading, or team at tackletrading.com for the email would be great. Matt,
we could do a little primer on how we all prepare for the scouting report meeting.
That'd be cool.
We haven't done that in a long time.
That would be cool. I could get down with that.
Kind of our process that we all 3 go through and getting ready for that scouting report, how we go about breaking down the sectors and, the different commodities and currencies and, how we go about creating those picks and whatnot, show them kind of the preliminary process of those spreadsheets that we do and filling everything out. I think that might be good.
Damn straight. I like that as well. All right, guys, we're out. See you tomorrow.